channel, guys. This is DCFS Academy. So in today's video, I'll be talking about fair value gaps, and not just about fair value gap. I'll also be talking about the valid fair value gaps, the types of setups you should look out for, and of course the entry models. So stick with me in this video so that I don't get anything mixed. I'll try my best to make it as quick as possible, but don't forget to watch to the end. And in case if you're new to my channel, don't forget to click the like, subscribe, and also click the notification button for me so that you get notified every time I drop my new content. Also, you can go back to watch my previous videos and also upgrade your knowledge in trading. So let's get started, guys. First of all, we have two types of fair value gaps. And the number one is bullish fair value gap, and number two is bearish fair value gap. Of course, bullish fair value gap are the gaps created in the forex market on a bullish movement by bullish candles, okay? And bearish fair value gaps are gaps or imbalances that are being created in the market by bearish movement and from bearish candles. So now, here lies the question. How do we identify a valid fair value gaps? All right, because I'll be getting this question so often. My students have been asking me about this also, and I decided to take out my time to do this so that everyone can also benefit from it. So make sure you stick to the end of this video. Here is 4 ways to identify a valid fair value gap. The first is unmitigated fair value gaps. As we can see right here, this is a virgin fair value gap, space between this candle high and this candle's low. That's a virgin fair value gap. Okay, we don't want to see another candle touch this fair value gap and still go on. This is not a virgin fair value gap, neither is it an unmitigated fair value gap. Always make sure the fair value gap you are about to trade from is a valid unmitigated fair value. This is your criteria number one. Criteria number two is candle reactions. All right, this is where so many traders get it wrong, because I've watched so many, some videos online, and I've seen, some traders just, after analyzing, pinpointing their fair value gap, boom, they put their buy limit, sell limit, and they are already in the market. So here is the second part. You have to make sure you watch and observe what happens in the fair value gap. Just like I said, the market must drop by, and there must no other be a candle that touches this fair value gap apart from this candle that created it. All right, so when the market comes back to mitigate it, we have to observe number two, which is candle reaction. And what are we looking for? We want to see a rejection in the zone of our fair value gap. So for a fully bullish fair value gap, we want to see that the candle was rejected, which means we have to see a wick inside the fair value gap. And criteria number two states also that the candle must close, this candle, the candle that dropped inside, okay, must close above the fair value gap, giving us a very good confirmation that bulls are very strong. Okay, and you enter from the second candle, place your SL either below the last week, or you can be conservative and place it below the fair value gap. But please understand this, that in any scenario, you must not trade if this candle right here, breaks below this fair value gap without any rejection. It shows that this fair value gap didn't hold. So why are we observing? We don't want to trade blindly. Okay, make sure you note that down. So don't just go trade blindly. Make sure you observe number two criteria. Always observe the market reaction in your fair value gap range. Okay, that is being said and done. Let's move on. So the number three is support and resistance. So right here, I did these illustrations. I'm sorry if you can't grab it very well, but I will try my best to explain everything that is going on right here. So the support and resistance is also a very good fair value gap setup you will ever get. All right, and of course, I'm giving you guys out this information for free. Please do your best to subscribe, click the like button, and also click the notification button so that you always get my new load dropped content. So here is a market that has been doing a swing highs and swing lows, and of course right here you see that this market breaks this last structure for support and resistance traders. This now becomes what? A support zone for our market, because it was a resistance that pulled this market down. All right, a resistance that pulled it down, and the market managed to break above. All right, making this line right here, this guy, our what? Support zone. And what happens? You happen to find a fair value gap aligning itself in this zone. Guys, this is a what? A good setup. All right, so far the fair value gap is a virgin fair value gap. Please do not always miss this setup whenever you find it in the market, because this setup has 80 to 90% win rate. Okay, I've tested it and I've traded it many times and it works out perfectly fine. So now, once you get this set up, just like I've explained, this fair value gap aligning in a support or resistance zone. Now, the psychology behind it, or the reason behind it, is because this now acts as a double influence. All right, remember that resistance and support itself is already a strategy that a lot of traders are using. Now, combining these two together makes it more powerful. So that is another criteria for getting and pinpointing a valid fair value gap. So now here comes the last part, which is the number 4. And the number 4 says strong and weak fair value gaps. I'm sorry if I've been very fast. I'm just trying to make this video as quick as possible. I'm very sorry if I've been too far, but you can rewatch this video, rewatch it and again, and you can get to understand whatever I'm saying, and make use of it the right way. So here is an illustration, and this strong and weak fair value gap also has its own style of trading. All right, unlike so many traders, they just trade whatever fair value gap they get. But in real sense, market operates either ways. Is either in discount or is in premium zone. Okay, for the advanced traders, they get what I mean. So buyers always look at to buy from discount zone, and sellers look at to buy from premiums. All right, because here is a lot cheaper for selling, and here is a lot cheaper what for buying, something like that. So now in this zone, all right, we have fair value gap here, and we have here, in newbies, we're gonna take this one. All right, because this is most closest. But trust me guys, this market will break this fair value gap and hit this premium fair value gap and then drop by. All right, now I'll be doing more videos on covering much more about this fair value gap, and also in my next video, stay tuned, I'll be giving you guys for the newbies in the house, I'll be giving you guys a good tool that you can use to identify a fair value gap that is in a premium on a discount zone. All right, I will do that video next. That will be my next video, and also my liquidity video is coming up next. Don't forget, and do not afford to miss all this exciting information. So now, don't forget to click the like, share, subscribe, and click the notification button for me. And of course, if you have any question, don't forget, do well to drop by in the comment section and give us your thoughts or whatever you want us to cover in the next topic. I will be very glad to help and render my service and knowledge to you guys. So with that being said, see you all in my next video. Stay safe. Bye bye.